What's going on, everybody? Welcome back to Fleetwood Trades Crypto. Today, I'm going live at the London Open, and we're going to see if we can trade Bitcoin in the London Kill Zone. Guys, I'm going to try to do this daily now, trying to do daily trading sessions with either the New York Kill Zone or the London Kill Zone. Those are the two times that I would trade most often. However, it is a little tough for me. The London zone I have to stay up to 2 a.m. to start, and it's going to trade from roughly between 2 a.m. to 5 a.m. And the New York session is usually between 7 a.m. to 10 a.m., which is still a little difficult for me to get up that early all the time and do it consistently, but I will try to be as consistent as possible with doing one or the other. With that being said, we're going to take a look at the Bitcoin chart, and I'm going to show you some things on how I trade and give you an idea of just what it is that I look for. And excuse me 1 second. What it is that I look for and how I look to trade the concepts that I trade. So I trade smart money concepts or ICT concepts, whatever you want to call them. ICT is the inner circle trader, and a lot of people don't particularly care for the guy who developed ICT, but his concepts do work, so I'll leave it at that. So looking at the daily time frame, we're going to go from the daily time frame and zoom into when we want to trade. I will trade anywhere from 15 down to 1 minute time frames. Daily chart looks like, these past 3 days kind of sucked, but it looks like a standard pullback from our wick swing low here to our wick swing high. We've pulled back, hit the 50% Fibonacci level, and I'm going to take the fib retracement off for now just so we can see. And we are currently trading inside of a fair value gap here that was on the third day of rising. So on the daily time frame, my long-term bias is still to go long. I'm still have a bullish bias on the long-term time frame. Now let's see, when we dig a little bit deeper into the chart, what the actual session bias ends up being. So on the session, this gray kind of highlighted area is this is the Asian session. So prior to where we start, and then where it kind of turns this brownish red color is the start of the London session. So we're inside this kill zone. This blue line here is midnight Eastern Standard Time. All of my times are Eastern Standard. It's just easy for me to continue to always use the same time zone so that I don't confuse myself or confuse my viewers when I'm talking about different times. Again, Eastern Standard Time for me, and it is the London's kill zone is from 2 a.m. to 5 a.m. So midnight is the true day open. Typically on midnight is when I'm going to see that. I have not looked at those two, but I will take a look at them. And if I see something I really like about them, I'll make a video on them. But thank you for watching. Thanks for the comment. But I will take a look at those. All right. So yeah, what we're looking at time-wise, we're looking from the open of the range of the Asian session to the low of the range of the Asian session, and we're looking for, I want to see something, oh, you're welcome. I want to see something move where we get a wick below or above this range, and then a move in the opposite direction. Typically, what we'll see is, I'm going to close this stuff out from the daily chart. Typically, what we'll see is a false move in one direction or the other. When the new session opens, we'll push up through the high of the old session, and then we'll trade back down, or we'll push down through the low of the old session, and then we'll trade back up. Let's see if we have an example of that. So actually, it happened this happened on the New York session. It's not marked, but the New York session starts at 7 a.m. So what I'll do is I'll mark this real quick. But you see the London session had a peak. This is for today. Here, this was the peak high of the London session. New York session opened above it and then just traded down the rest of the time. This was just a false move to the upside. And that's what I'm looking to trade a lot of times. I'm looking to see when we have a session that makes a false move and breaks the range of the session prior. And that is when I'm looking to see a reversal to make my entry. But I did want to show you guys that. And I don't know if there will be a trade to be had here or not. Honestly, this is the first time going live like this, so I'm trying to just fill some time and understand that it's going to be a long and kind of tedious thing. So with little viewership at this point, it's going to be hard for me to just keep talking to myself and keep this thing rolling. But I will say this, regardless of what happens on short-term trades, the worst case scenario and what happens a lot of times right before a big move is what we call max pain. And when you hear about people talking about max pain, is what is the worst case scenario to drive retail out before they make a move to the upside? Before big money makes a move, before big money creates the next bull run, and they want to get as much retail out so they can get as much of it as possible for themselves, max pain would be to drop this market, drop Bitcoin back down to the mid 60s or even below 60 one last time, likely right before the election, and then pump it up after the U.S. election. I'm not saying that's going to happen, but I think that would be a max pain scenario where everybody got super bullish. We broke out of that long-term range, and we broke above 70,000 again. And about a week before the elections, and then we start to see a dump. Again, not saying that's going to happen, but that would be a scenario that I could see just to try to be a final shakeout. And again, we're going to watch this on the 15-minute time frame and see if anything breaks from this Asian range, and see if we can swing below and go long or swing above and go short. There might be some more pairs that I could trade, but typically for trading like this and trading really short time frames or really small time frames, there really isn't another crypto pair that has enough liquidity to trade 1 minute charts. Maybe Ethereum, maybe Solana or XRP, but even those, I mean, they can drop 10% in an hour on sometimes. When if Bitcoin makes a 3% move or 2% move, Sol or XRP or anything else can still make 5 to 10% moves in an hour, and that's really hard to trade when you're trading really tight windows. Everything's in pretty rough shape over the past couple of days, so I think I think this pullback has been satisfactory pullback. I think it's been pulled back enough, and we're going to see what happens. But I think the price action that we saw yesterday was based on some really rough U.S. economic data, and being data dependent still at this point in time with jobs and job claims and manufacturing. And is the U.S. going into recession? Is Europe going into recession? Just a lot going on, and crypto doesn't exist in a vacuum. As much as we like to believe it does, it is still comparable and still has ties to traditional markets. So are any of you guys familiar with ICT concepts, or have you ever heard of the inner circle trader? Starting to get a move to the downside. So anyway, just a quick history on SMC, smart money concepts or ICT concepts. So essentially, there's an algorithm. Price moves algorithmically, and it doesn't really matter what retail does. It doesn't matter buying pressure, selling pressure. None of that really matters. there's an algorithm that drives the market one way or the other. And if you can be on the right side and understand when the algorithm goes from a selling algorithm to a buying algorithm, and you can get in at those levels and buy with the algorithm, you make money. Or when it flips from buying to selling, just being able to understand those instances where the algorithm flips is when you want to really take advantage of being on the right side of the market. Now, that's a very simplified explanation of what that is, but that's essentially what ICT concepts are. Sol's been taking a hit today as well, and Sol. I'm gonna watch Sol just because it's closer to making a move that I'd be looking for on Bitcoin, and it's close to taking out the low of the Asian session, and that's actually kind of a liquidity zone here. If this wick low, especially with it being a nice kind of a longer wick. Let's see. I think that's part of it, Ron. I think the conflict is definitely part of it. People always get nervous. There's a lot of just general uncertainty in the market right now. Uncertainty with the U.S. elections, uncertainty with that conflict. There's more conflict going on with Russia, North Korea, Ukraine. There's just a lot all over the place, and a lot of U.S. data is down. Yesterday, there was a lot of data that came out that was not looking good, so even the U.S. traditional markets tanked. The S&P 500 was down. Nasdaq was everything was pretty much down. But some of the concepts that I'll talk about with this trading concept is that all the news, all the macro stuff is a smokescreen for what the big money, what the banking algorithms, what the money movers are actually doing. Like, they're going to do what they do, and they use these news-driven events to say this is why this happened, while they're moving stuff in the shadows and they're making the moves happen on their own. It's a very interesting concept to think about, and I don't know, I don't know who believes what. It's kind of a chicken or an egg thing, right? Does the news drive the price, or are the prices already happening, or the market moves already happening, and that's just a convenient excuse for why it happened? I don't know. I can't answer that, but this conceptually would say that the price was going to happen. The market makers have already made their decisions, and they use the news to convince retail that's why this happened. So yes, this pretty significant 15-minute dump for Solana at the London Open. Let me go back to. If you notice, I'm switching between the perpetual contracts and standard crypto. I'm trading now on Margex, and that's going. When I enter my trade, it's going to be here on Margex. It's the only place in the U.S. I can trade on leverage that I know off the top of my head that I can get leverage trading. So it kind of sucks that the U.S. regulations have been so harsh on crypto, and a lot of exchanges have been pushed out of the U.S. A lot of them have been. Used to be able to trade on KuCoin. Used to be able to trade on MEXC. Binance US. I don't really trade on there anymore. I used to trade on regular Binance back in like 2018, but they've all been pushed offshore. It really sucks. But the reason why I switch is the standard Bitcoin pricing in USD is closer to the exchange that I'm going to be using than the perpetual contracts. So I always try to keep my chart as close to the chart I'm actually going to be trading on. And this is where I'm going to be trading. And part of this is going to be seeing if I can take a $100 margin account and see how quickly and how large I can build this account. I want to see if I can build this into a $3,000 to $5,000 account within 30 days. I don't know if I will be able to or not, but that's the goal. The goal is to build this and to take compounding gains. If I can make a 20 to 30% gain, compound it again 20 to 30% and keep compounding and see how far I can take this, and using proper risk management. If I can win 50% of my trades, I should be able to do that with a 2-to-1 risk to reward ratio, a reward to risk ratio rather. Bitcoin is not yet coming down, or not yet finished coming down. I would like to see how it reacts with the midnight open price. That's going to be, there's a potential for midnight to be a support and not to get down to this level. I'm interested to see how that works out and see what it does. Alright, Sol has not broken through this level yet. With these remaining pairs that are still relatively liquid, other than Bitcoin, you can look for what is called an SMC, smart money concept, SMC divergence, where if one of these pairs, like if you're looking at Bitcoin and Ethereum and you're watching them together and you see, they're pretty similar, right? Like the movements of the chart from Bitcoin and Ethereum, they're pretty similar. If one of them makes a lower low but the other one doesn't, that's an SMC divergence. It's no different than like a divergence in RSI, where the RSI makes or the price makes a lower low but the RSI makes a higher low. That would be a bullish divergence. The same can be said when you have two like pairs and one makes a lower low and the other one does not make a lower low. That is a bullish SMC divergence. And I use it a lot. I used to use it a lot trading Forex and trading indices. I really enjoyed trading the US 500, US 100, and those two oftentimes would run correlated with each other all the time. Two more pairs that run correlated all the time would be like the Euro and the GBP trading against the dollar. The Euro can make a lower low and the GBP does not make a lower low, and that would be an SMC divergence or a bullish divergence to show you that there's a good opportunity, there's a good chance price moves up from that point. So the same is, potentially here in crypto, where you have like pairs that would potentially do that. Bitcoin and Ethereum is one. It could be Bitcoin and Sol. There's other pairs that would trade similarly together, but you have to find those pairs that consistently trade very similarly. Like I said, in Forex, it would be GBP and Euro. They typically move in lockstep with each other. And in indices, trading indices, it would be US 500, US 30, US 100. They all typically move together. Sometimes one out of the three would be completely different, but typically they will all move together. See, and right now, like right now, XRP is not moving like any of the other ones. So XRP is kind of moving on its own. That would be something I would be totally outside of watching this one with the other three, because it looks like they're not. It's not really correlated right now. Um, so and you can kind of see this too, and this might be the case where the midnight open price becomes a support and doesn't have to make it all the way down to the bottom of the range. But we're going to see how this reacts. Wait for this 15-minute candle to close, and if it reacts strongly off of this level, and you see ETH doing kind of the same thing here, reacting off of this same level, then I might go down to the 1 minute time frame and see if I can pinpoint an entry. I appreciate you guys sticking around. This is the first time going live with trying to live trade. And obviously trading, if you guys know, is 80% waiting, 20% acting, and a lot of time just staring and waiting for something to happen the way you want it to happen or what you believe is going to happen and being able to react to it. So I appreciate you guys sticking around. And it's about 2:30 a.m. now. Yeah, 2:24. I'm pretty tired, but I'm gonna try and make this work. We'll play some music, but I never know what music will get me a copyright strike or anything along those lines. I gotta find something that's no copyright or free to use, no free use music. Give me a little something extra. Really? Rammstein's no copyright. Even their record label or anything won't copyright it? Have to check that out next time. Thank you. You had me for a minute, man. That would be cool though. I could go for some Du Hast right now. I need to wake up. And it looks like prices are just gonna fight this range for a little bit. But regardless, if I make it up, if I make it awake long enough to catch a trade here, it would be awesome. But at least if I don't, um, the steps are pretty easy to follow here. And if you want more on this strategy, it's ICT concepts, and this is the 2022 entry model. He's got a whole bunch of different names for different models and different trading strategies. He's got different mentorships he does every year, different years or whatever. I don't know what they're all called, but the 2022 model is easy to follow. It makes sense to me, and it's worked for me and made some significant profits. This happened to be one of my busier nights at work, so I was physically beat already before I made it home. So if I was to path this out and say what I think is going to happen, um, and I'm going to say what I think is going to happen because I've already established early on in the very beginning of this stream that my higher time frame bias, my daily bias is bullish, simply because we've been in an uptrend and we've already had a 50% pullback in this swing move. So I think that this pullback could be over, at least for any significant additional pullback. Now, obviously, we still watch and we still trade the times, because if we could just, predict everything, everything would be easy. But what I'd be looking for is for a price to come down, sweep this liquidity low, come up, make a new higher high, fill a fair value gap, and then take off. So this is kind of the model you're looking for. This is the crux of this model, where the price comes down, you're making lower lows and lower highs, lower lows, lower highs, and then you make a higher high. When you make your first higher high, and this would be coming down to the 1 minute time frame. So these little ups and downs here would be all the way down to the 1 minute. And then once you make that first higher high, somewhere between this peak and your previous liquidity point, your previous swing low, there'll be a fair value gap that you create on the way up. You'll create an area where there's a strong push to the upside. It's called displacement, and you're looking for a displacement move to the upside, and then come back to fill that displacement, and then you ride it the rest of the way up. That's essentially the pattern that you look for to play out when you're trading this pattern. And you would actually want to run this all the way up. Your first target would be the swing, or would be the high of this range. So you come down, you take the low on a false move. Your false move is to take the low, and then you come up and get the high. And that would just be your first target. Your second target would be the high of the previous day, which would be here at 72,700. Now, when you're trading, you're not always going to go for the, you don't have to go for the gusto. You might hit this in one session and be good to go, and that would be a massive move. That would be an absolute big winner, because you'd essentially be taking your position here with your stop loss here, and you're already getting a 5 to 1. So that's a massive position there. If you held it and you wait for the next level, and you can see there's a pretty obvious level of liquidity here, because these wick high that couldn't break through, when it sold off of this high, there's obviously liquidity up above here. So this could be another target, and that would be a 13 to 1. But I don't believe in going for these massive 10 to 1, 13 to 1, whatever, like risk to reward trades, just because you're not going to get them often. Actually, it's very, very rare to get them. When people talk about getting them, they're not getting them all the time. It's just not going to happen. But you can get 3, 4, 5 to 1 quite often, and those are your winners. That's cashing checks every month. That's taking out withdrawals every month and trading your way into an income stream. But this would be the ideal breakdown. Has anything else made that low yet? Has anything else crossed? Solana is the closest, but it has still has yet to cross. Nothing has taken out the session low from the prior session yet, or nothing that I'm tracking so far. So Ethereum has not, Bitcoin has not, Solana has not. And like I said, XRP, I would put XRP in the same, but it is moving very independently, is moving different than the rest. So this is not right now a correlated pair. So I'm not even tracking this with the other three because it's just not correlated right now. But there's nothing worse than being tired and not being able to stop yawning when you have to talk. And I'm trying just to not keep opening my mouth on stream. But yeah, at this point, again, I'm going to keep repeating myself a little bit for anybody who's coming in new. What I'm trading is I'm looking to trade the ICT 2022 model. I'm using the London open session or the London open kill zone to try to time out a Judas swing off of the Asian session. So the high or the low getting taken out. Get that taken out with just a quick sweep of the low or of the high, and then the actual move to follow. Typically the first move out of a range is a false move out, and you will then test the opposite side of that range. And then, like I said, once that range gets broken, then we would go down to the 1 minute chart and really like pinpoint in to an entry. But as of now, we're really not even all that close to getting an ideal entry yet. And with this trading strategy that I'm going to use, with the actual like challenge method that I'm going to do, I will have a spreadsheet. Actually, I have it here. So this is the spreadsheet, and starting with a $100 bankroll, risking 25% to gain 50%. I know that's very high risk. It's more than I would typically trade, but this is very similar to the 20 pip challenge. If you guys have ever seen the 20 pip challenge, very similar to that in Forex, where you would risk 20% to make 30%. In crypto, I prefer a 2 to 1 than better than a 1.5 to 1. So I'm going to risk 25% to make 50% per trade. So $25 risk, 50 reward off of 100. If you win it, you have 150. Then you roll that in with a 37.50 risk for 75 reward. Roll that, and that is the way I plan to take this. And if you win your first trade and you lose your second one, well, you've got 150. You lose 37. You take what's left, and you put it aside, and you start back at 100. You get to 225 and you lose 50. You take what's left, you put it aside, and you go back to 150. So that's the way that I'm looking at this. This is the spreadsheet I'm going to follow, and as I win or lose trades, I'm going to show you guys which step I'm on. But if for some way or another you can be very, very diligent and very selective with your trades, and you can win 10 trades in a row. If you win 10 trades in a row, you can turn $100 into $5,766 in 10 trades. That is not likely to happen. It is very, very unlikely to happen. But when you have higher risk and higher rewards, and you're still only looking for a 2 to 1 reward to risk ratio, it forces you to be more selective with identifying your trades. It forces you to be more selective with your entries and what you take. It keeps you from just being very gung-ho about just entering a trade just because you feel like you want some action for the day. That is one of the worst habits and hardest habits to break, is trading and forcing an entry just because, well, you feel like you should get a trade because you've been watching the charts for 2 hours, you've done everything, you've been watching, you've been diligent, and you want to trade. Like you want to get something out of that day. That is one of the hardest habits to break because if your if your entry model, if your conditions aren't met, if your reasoning for entering or exiting a trade aren't hit, you don't trade that day. And it's very hard to break the idea of just wanting to have action. So putting out targets like this and putting your risk out there and having accountability. For me, my accountability is going to be sharing everything I do with you guys and making sure that I don't do some dumb shit because I'm telling you guys not to do dumb shit. So I got to make sure that I'm a good example. So that's my that's my biggest reason for not trading just because I want some action in the markets. Now, interestingly enough, the midnight open price may hold as a support here, and I may not be able to get the entry that I was looking for. There's two scenarios that could happen here, one of which will more than most definitely have me be asleep before I ever get a chance to take a trade. Is that we have a move in the opposite direction that I'm looking for first, which would be to come back and fill this fair value gap, this bearish fair value gap, to fill this up before price drives down, and in which case it'd be somewhere around 4 or 5 a.m. and I won't be awake by that point. Or this area here, right around the midnight open, these two wick lows here that made equal lows got taken out, liquidity got swept, price moves up, and that could be the model that I was looking for entry, but it just doesn't come down and get the Asian low. It just got the midnight low. So if it gets this, and this is the move to the upside, I'm not going to be able to enter it simply because my model says I need to enter after the session or the Asian session low gets broken or the high gets broken, whichever happens to be the move for the day. Again, the daily bias is bullish. We've come beyond 50% retrace on the daily time frame after a strong move to the upside, getting up to 73,000. Came back with a 50% retrace into a daily fair value gap. So my higher time frame bias is still bullish. I just don't know if I'm going to get an entry myself tonight. And what I may do is I may just kind of check back in at 7 and see what the New York open close zone looks like. I probably won't be like cognizant enough to really trade it. Probably just come in and take a look and see what happened on the through the London session. I need to do is I have to adjust my time for my sleep schedule to trade the London session more frequently and be able to be up to 4 a.m. or 5 a.m. to trade this session competently. Because right now I'm falling asleep at 2:45, so I'm not even really even into the session yet. Oh, take care, man. I appreciate you checking in. I'm gonna leave this chart up. And I'm going to go to bed. But I'm going to cut the stream here. I'm going to go to bed. I'm going to work to be able next week work to be able to be more, stay up a little bit longer, shift my time a little bit, shift my sleep schedule so that it's not as hard for me to be up this late, and see how much of this kill zone I can get, because the time zone I'm looking for, and the biggest thing with ICT concepts is it's price and time. So where is the liquidity? The liquidity is going to be at the London Open, at the New York Open, at the London close, at the New York close. That's where the most money moves. That's where the most money in the markets move. Those are the time zones that you want to be in. You trade when there's most money involved. You trade with the big money. With that being said, I'm going to be able to trade this whole range from 2 to 5. So I appreciate you guys checking in. I hope you enjoyed this. I hope I was able to explain the concept a little bit. Hopefully, maybe I can come back tomorrow and break this down. If the move does something similar to this, and if this does play out this way, and we sweep this low and come up, maybe I can kind of walk through that process. But as always, guys, I hope you enjoyed. And until next time, peace.